Mr. Sir, how are you?
I'm good. How are you? Good to see you.
I am well. We've got Peter Wood joining us today. Peter, if you remember, was in Scottsdale when we first met.
Yep, I remember. Good to see you, Peter.
You too, man.
Hey, there's two things I need to change. One is I need to have a full beard, and two, I need to be a lot younger. So yours great because you guys are a couple of young.
Oh, come on. No, you'd be surprised. So we have in our groups, I won't say her name. I don't want to throw her under the bus, but I think the oldest gal in our groups in our mastermind is 72, 73.
Awesome.
Peter, you know who I'm talking about?
Yep.
I think, yeah, I don't think she's at our age quite yet, but she's right there. If I remember right.
I have a guy I've known him for 30 years, but he's a longtime financial advisor in the Dakotas, and he's a user of ours. He'll be 80, and the reason why I know his birthday is the day before mine, and in July, and he'll be 80 this summer. Still working away and using our software. And it's like, wow, that's just awesome.
And it's incredible. What's incredible to me, by the way, we're already rolling here. We're recording. We're gonna post this up, so
Yeah.
watch yourself. But no, what's amazing to me is, they say that, youth and vitality is a whole deal, and then you've got age and experience. But it's crazy how many folks in this business, insurance and finance, that are older have so much more energy than some of these younger folks just act like they are freaking dead. And like, holy cow, you got to have some energy, some activity. You got to be excited to get on a call. So kind of interesting.
Amen.
Was one of the things with my original mentor, Cliff. So Michael, my original mentor was a past national NAFA president.
Yeah.
And I thought for sure that I was going to come into the office. We used to share an office together. I thought for sure I was going to come into the office and that guy was going to die in his chair because that was his happy place. Like he loved working and helping people and helping agents. I mean, it literally was his life's work was to take the good that was bestowed upon him and turn around and give it to other people so they could help more people. And the only reason he ended up retiring was because he saw his dad go through some stuff when his dad got sick and his parents had these plans where it was like, hey, we want to do these things. We want to go visit these places and see these things and experience this stuff. And his dad worked too long. And then his dad got to the point where he couldn't go do those things. And Cliff was like, I still have so much more left in the tank, but he put in 50 years into our industry, He's like, and I still feel like I have more to give. It's like, but I need to make sure that Joyce and I can go do the things that we said we were going to do,
Yep.
that we want to do while we still can. And so that's what he did. And they're out there living their best life. They went to, I think it was Sweden for like a month last year and just living the dream, but I thought for sure, I mean, Cliff outworked me every single day that I was working for him because he had that thing, Carson. He had that energy and stuff. He just got out because he chose to, not because he had to.
Yeah.
Right on.
Moral of the story, Michael, age is just a number.
Just a number. That's right. Can't do much else to gray.
Oh, the gray just shows that you've been through it and now you know.
Yeah, as a badge of honor, right?
Yeah, you earned it. You earned every single one of those grades. So tell us a little bit about, I'm really excited to have you on because our audience, it's insurance agents and financial advisors. And, most of them want to learn to sell more life insurance, more annuities, more assets under management, more disability income, more long-term care. And I was telling Peter, what y'all have put together is probably the sweetest thing ever. But rather than talk too much about your products and services and different things you have, I'd like folks to get to know you and your story and why'd we even arrive there. And I'm just going to tell them all right now, if they want to sell more of those things, they need to get with you and have a 5-minute chat and they'll see how exactly you're going to do that. But what's your journey like? How did you get into this space? Did you just wake up in it or your arm was twisted to get into insurance and financial? How did you get here?
Well, it's a great question. Thank you for that. I've been right out of college. While I was still in college, I had my brother was in the insurance. He was in the employee benefit space. And so him and I would talk about what he's doing. Then I finished school. So actually the summer before I finished, I did an internship with a small insurance agency called Security Mutual Life in Nebraska. That's a long time ago. This is the summer of 1986. I got my insurance license then. Did my internship there with the general agent there. Dave Tucson was his name. And I learned a lot and I went back, finished school. So the following summer, I was an insurance guy and learned financial needs analysis, and disability insurance was always an area that I really enjoyed talking with, and health insurance seemed to be the two, and life insurance. There was kind of my little core there. And over time, what ended up happening is I had an opportunity to work in small group medical, and I became a rep for a company called John Alden, or North Star Marketing, back in 1988. So for a couple of years, I was a small group medical rep. And then I got an opportunity to be a DI specialist, a DI wholesaler for Provident Life and Accident. So for 5 years, I was just a DI guy working in Minnesota and in North Dakota. Then I had a little opportunity too. My brothers and I always had played music. And so we decided, we always played wedding dances and stuff like that. Our last name is Sir, Michael Sir. So we were the Sir brothers. And so I played music and I went full time with that for 18 months. After what's that?
What do you play? What instrument?
I play bass. There's 3 other brothers, guitar, acoustic guitar, and drums.
But a bass.
Yeah.
I'm a drummer.
So there you go. And so we did that for a while. And after I made so much money, I decided to get back in the insurance business. Hey, music, here's what I tell everybody. Love music, but do it for fun. Don't try to make a living at it. It ruins it. Unless you're Garth Brooks and get, the big deal. So we try to get a record deal, national, and the whole 9 yards. It's like, you know what? Enough of that. And so I got back into being a wholesaler with Guardian. And after a period of time with that, I got a call from a guy who I talked to earlier today, Brian Lauber. And Brian he hired me at Principal in 1997. And so I spent the next 23 years as a disability income regional vice president for Principal in the upper Midwest. I'm a farm boy from Iowa. My mom's still with us. She's 91 years old, still living on the family farm. And that's where my roots are. And living in Twin Cities now, Minneapolis, St. Paul. Eden Prairie is my suburb. And I was married right out of college to my college girlfriend. And her name was Amy. And we had 3 daughters. And unfortunately, Amy was diagnosed with stage 4 colon cancer at age 40. And so I lost her at age 43 after 2.5-year battle of cancer, and with 3 little girls at home. So for everybody who's on the call and listen to this, I can only tell you from personal experience, much less professional experience, if you've got your ducks in a row, you can survive Category 5 hurricanes. But when you don't, you don't. And most people don't have their ducks in a row. Fortunately, I had plenty of life insurance on Amy and disability insurance, and we survived financially. And so it's such a lesson in life. And so my passion in being a disability insurance specialist and advocate for disability insurance is just helping everybody understand it happens. And it's not something that you can, I always say this, buying insurance doesn't change the risk. All it does is shift the risk from personal assets to an insurance company. That's what insurance is all about. And when you don't have insurance, it's all your assets. You just start losing everything. So my passion for this, kind of like your friend Peter, as I get older, I get more passionate about it because there's more need for it. And my calling is to help advisors do a better job in this area, do the job at all, much less do a better job in this area of planning, which is helping their clients protect their most valuable asset, which is their income during the working years.
Yeah, it's incredible to me how neglected disability income is as a line of business by health insurance agents, by life insurance agents, and how much more likely, life insurance, obviously there's a lot of neat things it does, but its principal purpose is to protect you against the financial woes of if somebody dies too soon, right? But it's so much more likely. It does happen, and you're right, we want our ducks in a row, but if we look at the numbers statistically, you are nearly infinitely more likely to have a shorter long-term disability, to be out of work for a while because of that disability, and it's kind of incredible that we're skipping all the way to the least likely scenario to take care of that without even at least addressing, these other scenarios.
Yeah, I think it's probably the most underutilized financial services tool that we have in our tool belt.
100%. And it's interesting, I from a statistical perspective, of all the advisors and insurance professionals in the United States, there's about 1.5 million of them that are licensed to sell disability insurance. They got their life and health. Do you know what percentage actually are appointed with a DI carrier? Take a guess, guys.
Just less than 1%.
I was going to say it's got to be single digits.
Yeah, it is. And it's under 10%. And so think about that. So 90+% of the insurance and financial advisors in the United States don't sell any disability insurance. Not just once in a while. They don't do any. So if you think about the problems with that are endless. We could spend the rest of our time together just talking about that. But our customers aren't being served. That's the problem. That's why we're in the business. That's our why. But yet we don't do what really needs to be done, which is taking care of the most valuable asset, which is the ability to wake up in the morning, or, and if somebody's got $30 or $50 million laying around, or they're at an age where they can retire today, great. They have other needs, but they don't need individual disability insurance. And so the ramifications of us, our industry, not doing our job are endless. The number one reason year over year for home foreclosures and bankruptcies in the United States are health events. That's a problem. That means, as financial planners and financial advisors, as insurance professionals, a lot of our clients are falling into that category, and that's not okay. So I hope that what we're able to do today is to talk about it's the why the three of us are talking today, and why whoever's listening to this is listening, is we want to do the right thing. So the question is, why aren't we? Well, I think the answer is what we're going to talk about the rest of our time together is what's missing in this formula.
Yeah.
The beliefs in this to actually doing it.
Yeah, it comes down to, I always tell people there's only two kinds of insurance. There's the stuff that you legally need to have. If you're going to drive a car on the road or you're going to have a mortgage, you have to have those things. They're requirements. And then there's all the other stuff that you should have that people don't know about until they either go through something terrible or talk to somebody like us. Like you're nail on the head with the most common reason people lose their home is it's a medical related thing. It's the death of a family member. It's loss of income, right? And very rarely do we insure for that, but we insure the house for fire. Like, how often do people's houses burn to the ground?
And Peter, you're spot on. Even if you didn't have a mortgage, would you insure your home?
Yeah, it's the largest asset that most households have.
Absolutely. I wouldn't even think twice about it. Even if your car payment, so you paid cash for a 2022 Tahoe, are you going to not insure it? Of course you're going to insure it, even if it's not. But you got to have liability, and that's true. That's a gotta have. You got to have liability insurance. But I'm not going to only have liability insurance on my 2022 Tahoe. I'm going to put full coverage on that, comprehensive and all that, collision, all that stuff. Why? Because I don't want to shoulder the risk. If I only put liability coverage, and I've had junker cars for my kids and stuff like that. You only put liability on because it ain't worth it. I've had a number of those in the parking lot here. But that's a risk because it's not worth anything. If you have something worth something, you want to insure it. Why would we do anything different about our income?
So can I ask you something, Michael? Because you've spent not just time selling insurance, but you spent time with a multi-billion-dollar company that probably has put lots of money into R&D and market research and all these things. And in that position, you've probably also worked closely with whether it's NAFA and or FINESA and or a lot of your different organizations. You probably worked closely with the state legislatures and filings and all these different things. So you've probably had some conversations. Why is it that some of the least important things and the least valuable things, the insurance is required, but some of the most likely scenarios covering one of the most important things, your income, right? The thing that's paying for all these things that we're required to insure. Why is it that it's not required? Is it just simply because it doesn't affect anybody else and it's not a liability insurance? Or is there something else? Because what's the likely scenario? We're what, 40-ish trillion dollars in national debt, and somebody has one of these events. What's the likely scenario? They end up on welfare, and it puts more strain on our economy. Why isn't it pushed harder, I guess?
Well, I don't think the legislators ever had their eye on it. The long-term care is a great example of them getting their eye on it over the last few years. You've seen what's going on in Washington State and the other states. I'm not a long-term care guy. That's not my specialty, but there's more legislative action around that. Whenever the government gets involved, it tends to be a mess, and it tends to be another regulation. And so I don't think in our situation here, when we're talking about disability insurance, because they'll say, well, you got Social Security, you got workers' comp if you get hurt on the job. So there are insurances that are government funded already. Now, we all know, and I hope everybody understands that my wife qualified for Social Security, but there's all sorts of things to talk about there. For example, she had a group LTD plan. She was a flight attendant for American Airlines. It was a voluntary group LTD plan. So she qualified for it. Of course, when you were stage 4 colon cancer, she never went back to work. And she lived for 2.5 years. And then right away, because of the group LTD carrier, they require you to file for Social Security's disability, in which she did. And after a period of time, she was awarded Social Security's disability. That sounds good on the surface, and we were grateful for it, make no mistake. But people don't understand that what ends up happening is it offsets the group LTD plan. So whatever amount of money she'd received that she was owed from the elimination period, which is a 5-month elimination period with Social Security, we had to pay back because it took a year to get through the system. So I got this chunk of money, and I had to write the same amount of chunk of money back to them. So there's no net gain for us. So the concept of legislation and things like that, you already have Social Security. The problem with Social Security is it's not enough. It's hard to get. Not when you're stage 4 colon cancer. It's easy to get that. But for most people, it's kind of hard to get. But you do have to go through a long process. So there is some social insurance. The second biggest problem, though, for most people, it's not nearly enough. So whether you're talking about the knee-jerk reaction, oh, no, hey, guys, I got that through work. I don't need individual disability insurance. That's the number one objection is, oh, no, I've got that through work. I'm good. When they have no idea, the clients have no idea what they have through work. It's just a natural knee-jerk reaction. And Social Security, oh, no, I got Social Security. Great. Do you have any idea how it works and how much money you'd actually receive if you're disabled? It's not nearly enough for most people. So there's a lot of parts to this, Carson and Peter, that we need to educate our advisors on to make sure they understand that the best decision is to talk directly to your client about the need for protecting their most valuable asset, which is not their home or their cars, it's their income, with a way that they can understand what we're even talking about. We got to educate them.
So, and this is one of the reasons I'm so excited to have you on, because I found, as we run our programs, we coach, we teach, we train, we publish over 1,000 hours of training and all these tools and resources and different things, and agents still have a hard time adopting. And we're not necessarily out there talking about disability income. We're talking about a lot of things dealing with, growing an agency and selling life insurance and whatever the case may be. But it's implementation. We found the thing, and every insurance agent and financial advisor, they want to say their number one motivation is to serve people. But let's be honest, if you didn't get a paycheck for it, you'd probably find something else to do. It's just, you have to. This world turns on that, right? And so one of the first things agents care about, they may not say it, but they do care, is how do I take this and turn it into revenue without overcomplicating my life? Because that's the biggest reason agents don't adopt some of the things we teach faster, is they see it until they actually just put in a little bit of work and see that it's a simplification, not a complication. They feel like, oh, it's complicated and complications aren't going to make me money. And so again, one of the reasons I love what y'all do so much, and I can see, knowing more about all your experience, where and how and why it's become such an incredible, powerful tool that you put together and resource. But how is it that you take the average agent? What's the best way? If you're the average agent that has never talked about disability income before, your health, your life, you're doing commercial insurance, right? Whatever it is you're doing, how do we remove those roadblocks so that they can see a profitable path forward to adding that to their conversation without overcomplicating their process? Does that make sense?
Oh, it does. The answer is a system. You need a sales system, because what we don't want to do is reinvent the wheel every time you talk to somebody. And when you have a sales system or a sales process, it makes it easier. I think at the core of it is, the very, very core is the belief, the why of what we're in this. And you're right. The number one reason why most of our people that are listening are in the business is to serve people. But we're trying to take care of their needs. They have a lot of needs. So that's at the core of it. And I don't question the heart of it. It's the next ring out is the how. How do you do this? Remember Simon Sinek, it's not what you do or how you do it. It's the golden circle. It's not what you do or how you do it. It's why you do it. It starts there. And if you're talking to a client, even though you may not be that experienced in selling a particular product like disability insurance, you don't have to be a super specialist. We have specialists all over the place through IMOs and BGAs and carriers and stuff like that. There's plenty of expertise. And so I think of it as a three-legged stool. If I'm the insurance agent or financial advisor or broker or whoever, and I'm talking to a client that's in the working age, it's first identifying who's a prospect. My business partner, Jim, and I will ask an advisor, hey, do you got any upcoming DI opportunities? Nah, not right now. Ask his question in different ways. Who do you know who's in their working years and needs to have an income protection conversation? Oh, geez, I probably have 200. It's a thought change. The second thing is a behavioral change. With just a little bit of effort, just a little behavioral change, you can start writing all sorts of disability insurance. I see it all the time. So I think at the core of it is the why. If you truly are there to serve people, then you should take an extra step It's not going to complicate the rest of the world. In fact, what it's going to do is it's going to enhance your relationship and your credibility with your client because you're actually looking out for them versus, hey, I'm going to take care of your property and casualty. Yeah, I'll even do your life insurance if you really want. But if you get, if I get a phone call in the middle of the night that so-and-so's had a stroke, I didn't bring up the core of the whole thing, So that's what we have to do is you just don't want to be that insurance or financial advisor who gets the phone call from somebody's spouse saying, hey, so-and-so is just in a car accident or just had a heart attack or just had a stroke. What do we do next? And if you don't have the right answer, you say something like, well, if he dies, we're okay because we got life insurance. We got your health insurance in order, but he may never work again. What do we do about that? And it gets real quiet. So that's why we have to change our behavior. And then the third part is how, it's the second part really is how do we do it? And that's why, Carson and Peter, that's why we built the OneProtection system is to make it simple because simple beats complicated every time. And I call it the three-legged stool of how this is going to work really well. The first leg of the stool is the insurance agent or financial advisor. They're the ones who are responsible for and are the quarterbacks for their clients. They're the ones who are selling stuff to them and having needs conversations. The second leg of the stool is they have to have access to product through an IMO or a BGA, and you guys can help. We can plug people in all day long with, there's wonderful broker general agents and IMOs and everything in the country. There's all sorts of product and expertise out there. So finding product is easy. And people say, well, is the disability insurance industry healthy today? It's healthier it's ever been. The carriers that are there, back when I first started, which is a few years ago, there used to be 150 carriers selling disability insurance. Now it's about 24 or 5. But the ones that have stayed in the market are doing wonderful. The products have never been better. The process, the underwriting process and the process, the application has never been better. And the pricing has never been better. There is all needs, white collar, blue collar, highly compensated, business owners, farmers, everybody. There's product for everyone. Even if you're uninsurable from a standard company, there's all sorts of special risk options out there too. So there's no excuse from that perspective. But really, the third leg of the stool is where it all comes together. First leg is the advisor, talking to the client. Second leg is having access to products and support. The third leg is having a process, which is what I believe is OneProtection is the best process that all might be. I didn't do this for a particular carrier. It's carrier neutral. And we did that so no matter who they're selling, what carrier fits that client's needs best, I've got a little track to run on. And we'll talk about that here in a little bit here. But I think that that's the bridge between illustrations and getting them into application. You got to have a sales process. They understand their problems. So the solutions make sense.
Can we backtrack just a tiny bit? And Peter, I'm sorry, I don't mean to cut you off. Also, Peter, you're muted, so you weren't going to say anything anyways.
I was going to think it real hard, though.
I want to cut, we don't have to spend very long on this. But again, we work with hundreds and thousands of agents every day and every week. And one of these prevailing concepts, I was talking to an agent a few weeks ago, and I was telling him about your program. It was after I did a demo with you, which, by the way, I would second your notion that OneProtection is by far the simplest, best. It is so freaking phenomenal at selling disability income simply, cleanly, carrier neutral, and it sells the life insurance for me too. It's done and done all in one. It's really cool. But I was talking to an agent about it, and they had the normal qualms. Well, underwriting, they're gonna have to pee in a cup anyways for this life insurance policy you're selling them. You can send that paramed over. This is simple stuff. But they brought one thing up that I think most agents have this huge misconception about, and it's that it doesn't matter. My life insurance policy I'm selling them has accelerated benefits, so they don't need disability income as well. Is that something you could touch on for just 30 seconds?
Absolutely. Let's think about what accelerated benefits are designed for when they're used. Now, can you have some cash out of there in order to take care of some expenses? Sure. But disability insurance is just a much more robust. And if you think about our monthly budgets for everybody's got a monthly, money in, money out. What's the best way to solve that? Is it accelerated benefits? If you really put the numbers to it and our software helps do that, what the amount of money, you might get $100,000 or $200,000, but you need $1 million, it's not nearly enough. So what we need to do is help them understand what the options are to solve the problem and what's the definition in order to get those accelerated benefits. I'm not an expert in that area, but I do know this. Disability insurance covers 3 things. And this is, I think will bring the point home. There's 3 types of claims in a disability, a scenario, a comprehensive disability policy that properly covers the following. The first, and I'll call this the least invasive or the least problematic type of claim, is when someone's too sick or hurt to work full time, but they can work part time. So in other words, they have a reduced capacity. They're not able to make their full income, so they have a reduced amount of income. So how do we handle that? Well, we handle that through a partial or residual rider on the policy. So if you think about someone who's degenerating, they might have diabetes or MS or some type of degenerative type of thing. It's not just boom, you're disabled. It's a degeneration. Well, you might be able to work for 2 or 3 more years. So how do you handle that? In the meantime, the accelerated benefits isn't going to help. So you really got to ease into total disability, which is the second type of claim. So the least invasive is partial disability. It tends to be a precursor to total disability or after a total disability. For example, bam, you have a heart attack, you're out for a period of time, you start working your way back. Starts with total disability. That's the second, and that's the largest area of claim. So you've had your heart attack or you're in a car accident, you're all busted up, and over time you start working your way back. So total disability, protecting them in their occupation, is the core of the plan. But on the one side is partial disability, easing into or easing out of total disability. And the third area of claim is catastrophic. What if you're so severely disabled that you can't feed yourself? You can't do 2 of 6 activities of daily living. That same argument about accelerated benefits to say, oh, then you don't need long-term care. Well, I'm not so sure about that either. So you got to really think about what the options are out there and what you want to accomplish. The third area of claim, if you're catastrophically disabled, which means you can't do 2 of 6 activities of daily living, you can't feed yourself, you can't go to the bathroom or whatever it is, your expenses are going through the roof. And there's a lot of people who have lost certain faculties and they can't do that. They live a long time. So the expenses are going through the roof. I'm going through with my 91-year-old mom right now. She needs 24-hour care. Now, she's not to the point where she's lost all of her faculties per se. Her mind's with us, but she doesn't see very well. She's got macular degeneration. She can't cook on her own or any of that kind of stuff. Now, let's put that down into the working years. It happens all the time. A stroke or something, and then they're catastrophically disabled. So a good disability policy will cover whether it's partial disability, total disability, or catastrophic disability. That's a really good DI plan. Where accelerated benefits, they can take parts of that, but it's not comprehensive enough. And you might guess wrong. Well, if you're waiting for that, it may not work. It's kind of like waiver of premium for life insurance. That works great when you're totally disabled and you fit that definition. But all those claims I just mentioned, a big chunk of them never qualify for that because they're never disabled enough for that. So in the meantime, you're losing your house, waiting for accelerated benefits or waiting for the waiver of premium to kick in. It's a bad plan because it's not comprehensive enough. So Carson, that's how I would answer it is you don't want to pick the wrong tool out of the tool chest in order to solve the problem. Because if you guess wrong, they lose everything. And that's not good for anybody.
I think to that point, the pick the right tool for the job is important because a lot of agents look at the ABRs as it's a multi-purpose tool. And it is. But anybody that's ever had like a Leatherman that has that multi-purpose tool that it's got a saw and a knife and a screwdriver and all of those different things on there. Can you get by with that tool? Sometimes. Yeah, sometimes you can. But if at the end of the day, what we're trying to do is, hey, I've got a nail and I need to drive it into a board and I have either a screwdriver, a wrench, or a hammer, like I can get it done with a screwdriver. I can flip it around backwards and tap on that thing. I'm going to bust the handle up, but I'll get that nail on the board. I can take the wrench and I can turn it sideways and I can smack on it, but it's probably going to chip the chrome off but I'll get it done. Or I can grab the hammer and it's done, right? Because it was the right tool for the job. So it's the most efficient way. It's the most efficient way to handle it. And then along with that is people feel that it's like, oh, I did this. My agent sold me on this is a one size solution fits all, right? And the challenge with that is not really understanding how their policies work. And so I like to ask my clients 2 things, like, when is the absolute worst possible time that you could find out how what you have does work? You have this stuff coverage through work. You have Social Security, you have ABRs. That's all great. When is the worst possible time that you could find out how that does or doesn't work? It's when you need it, right? Because if you think you don't like paying for insurance now, wait until you paid for it for 20 years, only to find out that it didn't cover you the way you thought it was going to. Then you're going to really not like paying for insurance.
Well
right?
said.
Regardless of the type of policy or the need that it solves.
Yep. Well said. Well said, Peter. In fact, I have a little saying here. The time to build strong foundations is before the storm, not during it. It's too late. If it's, if somebody, if a lot of times I'll ask advisors, do you sell disability insurance? Oh, sure. We offer disability insurance. Okay. If my clients ask for it, we'll sell it. Nobody for the most part picks up the phone, says, you know what? I've been thinking a lot lately. I should buy some disability insurance. Let me call my agent and buy it. No, what ends up happening is they find out they got a problem. They're scared. It goes from the bottom of the list of priorities to the top of the list. Like, uh-oh, I've got a problem here. I wonder if I can get disability insurance. Guys, if I could tell you how many times I've gotten calls in my 38 years in the business of someone who said, they didn't buy, but they want to buy now. I said, what's wrong? Well, they just got diagnosed with whatever. How many times? Well, it's too late. Nobody who's just diagnosed with cancer, is going to be able to buy disability insurance now. It's too late. And the same thing's true. I had a guy who said, hey, can you talk to my son-in-law who's a policyholder of mine, and he's got stage 4 cancer? And I said, sure, and I know a little something about that. So I talked to this guy, nice guy down in Florida, and he said, so I explained what he had through the carrier I was working for, and I went through it. He said, hey, by the way, is there any way I could buy more? No, because he was literally on claim asking to buy more because it wasn't enough. So I think, Peter, your point is it's using the right tool and understanding what they're designed to do is where it starts. It starts with understanding your problem or what your needs are, then finding the right tools to solve it. And I think that's the best way to handle it from A to Z.
So, couple things, because I want to get into, we've already spent half our time and we haven't even gotten into, I really want to get into all this experience. It all comes together. What exactly do you do to make it simple? And I'm thinking back to the demo I did with you, page by page. Each one of those examples is there very explicitly and again, very simple, but it addresses a part of the conversation, right? So I'd love to get to that. But before we do, I have to ask, because you're right, there are, you said less than 10% of agencies out there that are even appointed to do disability income, which, by the way, getting appointed with a DI company is like the easiest thing ever. Aflac and Illinois Mutual, and they are waiting for you they cannot wait for you to call. It's one of the easiest appointments you'll ever get.
Yep.
But these agencies that are, okay, out of the, what is it? I think there's a couple million licensed insurance agents in the United States. And so not all those are an agency. We have hundreds of thousands of agencies, though, across the U.S. And out of hundreds of thousands, let's call it 300,000, 10% even are licensed or appointed to sell DI. So let's call it 30,000 nationwide. And out of 30,000 nationwide, how many even ask the questions? It's probably less than 300 nationwide are actually asking these questions. So there's this huge disparity. So my question is, with all this experience, all this wisdom, all the gray hairs.
Hey, not that much gray hair. So
with the very
few select gray hairs that I have, go on.
If this was your last opportunity, as passionate as you are about DI, if this was your last opportunity to give insurance agents one single sentence, one phrase, one thing they could say to their clients to start the conversation, whether it's a CSR, a producer, an agency principal, it doesn't matter who's saying it. What's the most powerful conversation starter you've found in your decades of experience?
I think the most important one is have you ever thought about what your most valuable asset is? Is it your home or your car? Is it your boat or your Lexus or whatever? Or is it your income? So without your income, there is nothing else. So I think that's one of the things that's really important. To the advisor, here's what I would say. Don't vote for your client. Let them vote for themselves. Oh, no, they don't need that. Or they'll probably be just fine. Don't vote for them. Let them vote for themselves. That's my number one message for today, is because we're talking primarily to the advisors, right? Insurance and financial advisors, is don't vote for your client. Don't make a decision for them. Let them make their own decisions. Your job is to talk with them about this critical area of planning and let them decide. At the end of it, they say, you know what? Hey, Peter, thanks for going through it. Thank you for showing me the options. I've decided I don't want to buy this for whatever reason. And you say, I think you should. And they say, I don't want to. Well, you've done your job. Check the box, talk about something. You can talk about the weather or the impending snowfall. You can talk about anything you want. But our job is to make sure they vote.
You're not in Arizona.
My daughter just got back from Arizona. She was at school in Phoenix. And she hasn't seen the sun since she's gotten home in Minnesota. So that's what I would say, Carson, is to the advisor is don't vote for your client. Let them vote for themselves. And for them to the client say, hey, What do you think your most valuable asset is? Is it your car? Is it your home? Or is it your income?
It's so
I think
simple.
that's great.
It's so simple, and what's crazy is, and because I know my audience, I'm in tune with my audience. I'm sitting here and just imagining them in their little Prius driving to work or whatever they're driving, and they're listening to this podcast and they hear you say that and they're like, "No, that's too simple. It's so simple it sounds cheesy, it sounds corny, it's not gonna work." And those are the same assholes that aren't gonna ask their clients. I'm just gonna say it. Because it's too simple, it couldn't possibly work. Well, how's all that complication treating you?
Yeah.
You know?
As Dr. Phil was saying, how is that working for you? So
Yeah. So Michael, I have a question for you I'm a multi-line agent, right? I primarily do personal P&C and life and financial services. And one of the biggest challenges that I see multi-line agents, whether it's commercial or personal, but they do some life and financial services kind of stuff, is they'll put themselves in a position where they do a good fact finding and they uncover the opportunities. But one of a couple different things gets in their way. And it's either that they're trying to maximize their contract, which I get. I understand that. And for them, like with the captive carrier that I'm with, that doesn't do anything for my contract at all. It's in my client's best needs, but it doesn't do anything to satiate my contract, my production requirements, stuff like that. So that's one part of the coin. The other part is I see agents through the coaching group where they do a good job at fact finding, and then they go, Michael, we had a really good conversation and we got to the bottom of some stuff. And here's what I think you should do. And they go, boom, 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 boom. And they lay out 15 things because you came to me as a new client and said, hey, Peter, I'd like a quote for my home and auto. And I went, yeah, absolutely. And I convinced you, let's sit down and do a fact finding to make sure that we're getting you what's the right fit for you instead of just what your parents had. And when we have this conversation, we do uncover like, hey, there's a life insurance need and some retirement planning need and some additional exposure and there's an opportunity for DI or long-term care. And they come back and they present 57 things and the client does nothing because we just unintentionally put them into analysis paralysis, right? Because I just told them, hey, you have this laundry list of stuff you have to do. And I didn't, as an advisor, I didn't do a real good job at kind of throttling that and saying like, hey, we're going to start here, but then from here, where would you like to go? And I really liked your point about not answering for them. I think that's brilliant. But with the software that you put together and the platform and your experience, what kind of opportunities do you think agents in those positions have that your software can help with? It can help with working through that laundry list of stuff, and then also that that we don't put them into analysis paralysis.
Well, Peter, we could spend another hour on what you uncovered so many good parts there. What I would say is this: analysis paralysis, dumping too much on the table just destroys everything. It's too much information. We got to take it slowly. I think identifying, having a good fact finder, an overall client information questionnaire or some type of fact finder identifying things, but it has to start somewhere. And by asking them, there's a whole bunch of stuff here to talk about. What are you most worried about? What's your biggest concern? I called you because of my auto rates are going through the roof. Can you help me there? Let's start there. There's a guy by the name of Ken Wiley. He's since passed away. He was the originator of the salary continuation sermon series and so on, and qualified sick pay plans. He was an expert in that area. And Ken was a World War II vet and was a wonderful guy. But he talked about he taught at Purdue University, and he talked about the art of successive marketing. Don't do it all at one time. Start someplace and do it as follows. Hey, today we're talking about we're making sure your car insurance is taken care of. We're going to work on that and stuff like that. Not for today, but next week we're going to talk about your liability insurance. So start there. So then you get that taken care of. So next week you get back together or whatever the next time is and say, hey, here's what we got. All good. Sign here, whatever. It's all delivered. Are you happy with it? Oh, Peter, you're the best. Thank you for doing that. Save me $200 a year or whatever it is. Great. Now, but the last time we talked about that, we need to talk about your liability insurance. It's a whole nother conversation. You got time now, or do you want to talk about that next week? Let's talk about that next week. Then you start talking about liability insurance. Then liability insurance, you get that taken care of. Say, hey, we haven't talked, not for today, but the next time we talk, we got to talk about your life insurance. Got to make sure that because you mentioned that and it's a priority of yours. So you work your way through. Here's my point. You don't dump everything on them at the one time. It's succession. It's a relationship. You're not going to solve everything at one time. It's too much. You'll lose them as a client. You got to start somewhere. But the second thing I want to make everybody clear of is that disability insurance is never a good lead dog. Hey, it's nice to meet you. Let's talk about protecting your most valuable.
Protection disability insurance. Yeah.
It doesn't work very well. Disability insurance is best served and taken care of when you have a client. People do business with people they know, like, and trust. When you have that established, then you can start getting into some things. It's personal. You start talking about income and what you do for your living and stuff like that. It's a little bit more involved. So in the art of success of marketing, depending on where you're at in that relationship will depend on when you enter into the DI conversation. For Carson, you'd mentioned there's thousands of people inside your syndicate, right? There's thousands. Think about the hundreds of thousands of clients there, most of which they have a relationship because they know them and they like them and they trust them. That's why they're doing business with them. That is who, during the working years, of course, that's who we need to be talking to about disability insurance. Is they already know, like, and trust you. One of the next things we need to talk about, hey, we've been doing business together for 10 years. One area of planning we haven't done really spent enough time on, and that's on me, is making sure your income's properly protected. We need to talk about that next week, because if we guessed wrong here, everything I've done for you is destroyed. No financial plan stands up to a Category 5 hurricane unless they've got all the pieces in place. And that's just the truth. So it's so easy to, when they know you, they like you, and they trust you, to go back and say, hey, here's an area of planning we haven't spent enough time on. I want to go through a process. It's just, it's call it anything you want, but it's the OneProtection process. We're going to work our way through and see if you've got a problem. And if you've got a problem, we're going to clearly identify it and see if you want to solve it. If you don't have a problem, I'm going to pat you on the back and we'll move on to something else. That easy.
So let's kind of pivot into that. What is the OneProtection process? And I'd like to talk about, like I mentioned before, what is it you do specifically, and what does OneProtection as a software do? That I don't care. You could be a State Farm agent, an independent agent. You could be a RIA. You could work for a broker dealer. You could be at Edward. It doesn't matter. It works for everybody, and it's going to be compliant as far as software goes, I would imagine, as well.
Well, it depends on the system. Some systems are more uptight about compliance than others. So it depends. So depending on what chair they're sitting in will depend on what access they have to outside of their company's things. And so, if somebody has an interest, we can just drop me a note and I can let them know if we've gone through compliance with that particular broker dealer or whatever. Most broker dealers have open platforms. Most career systems have open platforms. Most independents, of course, have no issue with any of this. A lot of people aren't even securities licensed. They're just insurance, fixed products. So it depends. But the point, Carson, is that our software is carrier neutral and distribution neutral. So we don't care. So if this is going to be a fit, so should we just go ahead and talk a little bit about what it does?
Yeah, what exactly does it do? Because I feel like we built up this process or this reality. We've established the reality that the client needs it and the client wants it. Agents should want to offer it, and it's not that difficult to offer. So how do we not overcomplicate? How do we complicate the entire process of whether it's quoting, presenting, talking clients through the different nuances of that, talking through the nuances of, one of the biggest, in my experience, one of the biggest kickbacks I get from clients is, I don't want to be insurance poor. I've already got health insurance and home and auto and life insurance. And now you're going to make me insurance poor. But again, I've done the demo. You can clearly see, you 100% guarantee you don't end up insurance poor when you do this and you do it the right way. So how do we solve for all those things and just simplify all of it? How does OneProtection do that?
Yeah, what a great question. And being insurance poor, I always chuckle at that. Say, well, if you're buying the right amount of insurance, it has nothing to do with being poor, insurance rich, or insurance poor. The only time that comes out, it's a natural reaction when they don't understand their problem. When you don't understand your problem, I could walk down the street selling pencils. Hey, $1 a pencil. People, I don't need a pencil. It's for, okay, we'll drop the price to 10 cents. 10 cents a pencil. I don't want it. A penny. Would you buy this pencil for a penny? No, I don't have a problem. If you don't believe you don't have a problem, it doesn't matter what the price is. So the same thing's true about being insurance poor. If you're spending money and you don't believe it's solving a problem for you, you feel like you're like being been sold something, like you don't really need it. But when I spend a lot of money on disability insurance and life insurance, by the way, and because I know I need it, I've seen it, of course, as you guys know, but also I need this. I need those insurances. Do I like spending it for my homeowner's insurance and car insurance and And my boat insurance, of course, I don't part with that, but I do it because I know I need it. I don't feel insurance poor.
So,
It's legally covered.
so what does One Protection do to set up the need effectively before solving for the need?
Well, if you could, one of you needs to allow me to share. Maybe, Carson, if you could do that, I'd appreciate that. And I'm just going to show, you got to remember my three-legged stool. The advisor is the quarterback with the client, and it starts there. You definitely need to have an outlet for disability insurance. Those who can, great, thank you. Those who can run the illustrations for you, process your business. There's my 91-year-old mom. And so what I'm going to do here is just in the time that we have left, is to talk about One Protection and what its role is and how easy it is to use, a demo in effect. So the name of our company is One Protection. We are the third leg of the stool. The first leg is the advisor, insurance agent, financial advisor, because they're the ones working with the clients who need to have this conversation. Number two is you got to have a good outlet or broker general agent or IMO. And if you don't have one, drop Carson and I a note and Peter a note. We'll find you one because they're all over the place. They're really good ones out there who really know how to do disability insurance. They have all the carriers that you're going to need. They'll run you the illustrations. They'll process your business. They'll help you all the way to policy fulfillment, policy placing, and all that stuff. So the third leg of the stool is the presentation. So that's what we're going to talk about here. One Protection is the name of our company. Our tagline is protecting the one asset our clients can least afford to lose. And I always say, what is that asset? Well, we've been talking about it for 50 minutes here. It's the ability to make money, right? Protecting that income asset. But the second question is, what are we protecting it against? The answer is a health event and a premature death. That's what we're paying. You may have heard of the human life value. We'll get in that here in just a second. So I'm going to deal with a 36-year-old or 35-year-old making $150,000 a year. So if I just met someone who's making $150,000 a year, and I ask them, hey, Billy, how much money do you think you're going to make between now and the time you retire? At 150 grand a year, they're going to look to one side, calculate a little bit, and they're going to say, I don't know, 3 or 4 million? Well, let's find out. I've got a client here. I've got some case examples built out here. So the first thing I would do here is I call this the 4 Ps, P as in Paul, of a highly effective DI or income protection conversation. The first P is positioning the income asset. So Billy, I asked Billy a question and say, how much money do you think you're going to make? He said, oh, 3 or 4 million. Actually, Billy, you're going to make between now, 35 and normal retirement age with a 3% growth, you're going to make about $8.2 million of income. Have you ever thought about that before? It's like, whoa, that stops them in their tracks. There's a couple of anecdotal things and some of my favorite sayings I'll sprinkle in here is the pain of the problem has to outweigh the pain of the solution. Talked about that earlier about selling pencils. If you don't have a problem, you're not going to spend anything on it. But if we don't adequately demonstrate the problem, it doesn't matter what we pull out of the bag or put up on the Zoom screen. The second thing I like so much is that if you keep doing what you've always done, you'll keep getting what you've always got. There has to be, if you want a different outcome, you have to do a different income, a different input. That means a little bit of a behavioral change. But the other one I really like is you can't fix what you can't see. Visual images, remember the picture speaks 1,000 words? We've all heard that since we were little kids. The actual number is much higher than that. Visual images are 60,000 times more effective than words or text. Why? Because our human brain is designed to learn and make decisions better with pictures than they are words or numbers on a page. That's why this is so powerful. Simple, but powerful. That's what we built One Protection for. So the first P is positioning the income asset. So, Billy, you're going to make $8.2 million between now and the time you retire. So Billy's going, holy smokes. But the next part of this is this really speaks to the property and casualty agents and those who are financial advisors who do financial plans. Say, hey, Billy, prior to this conversation, tell me what you think your most valuable asset is. Well, it's my home. Well, the home's worth $550,000. You got a cabin up north, $300,000. You got a vehicle 1, vehicle 2. These are all important things. I always say make the unknown known by using the familiar. Well, what are our clients familiar with? Well, writing out checks for other insurances like this, like insuring their house and their cabin and so on. These are all really important things to insure. But look at that income asset compared to the other assets they're insuring every day without thinking twice. Here's another way of bringing the point home. Hey, Billy, your income asset is $7.2 million more valuable than all the other things you insure right now. Gets their attention pretty good. You see how I position the conversation? Most of the time we go from asking some needs questions. Hey, you need some more disability insurance? Sure. Show me some options. Great. Then we run to illustrations. Illustrations do 2 things really well. Number one, it makes it really look complicated, all verbiage and stuff. And number two, it makes it look really expensive because it's out of context. And we're here to solve all of that. Stay out of the weeds. I always ask the trick question. Oh, it's not a question. It's just a funny question. I'll be in front of 100 NAIFA members, NAIFA Nebraska or something like that. And I'll ask the question to all the insurance agents and financial advisors in the room. Raise your hand if you believe income protection is an important part of the financial plan. Out of 100 hands go up. Second question is, raise your hand if you're comfortable having the income protection conversation. 2 or 3 go up. That's why we're on the call here today. But then I ask the other question is, raise your hand if you bought a truck or a car in your life. Everybody raises their hand. Of course I have. And raise your hand if you've read the owner's manual from cover to cover before you drove it off the lot. Everybody laughs and says, of course not. Why would we do that with disability insurance? Stay out of the weeds. The details of the plan are the death of the sale. That's an old saying from one of the originators of MDR. The details of the plan of the details of the policy are the death of the sale. Stay out of the weeds. Nobody wants to know all that, but we think they do, and they don't. It's like when we buy a car, you don't want to read the owner's manual beforehand. So the first thing we've done is establish that their income is by far their most valuable asset. That's the positioning. Number 2 is, do we have a problem? In this case here, this particular client's got a group LTD plan at work. The number one objection is, oh, no, Peter, I've got that through work. How you need to deal with that is, that's great. Tell me about it. And then it gets real quiet. Well, they stumble around. They talk about deductibles and copays. They have no idea what they're talking about. And the better way to do it is say, hey, Billy, we're talking Billy, the client here. I know you work at XYZ Manufacturing. You guys got a short and long-term disability plan at work. Do you understand how it works? So if you were too sick or hurt to work, you have to expect, you know what to expect. I have no idea how it works. Great. So let's get together and talk about it. I got a copy of your plan booklet, or if I don't have it, can you send me a copy of your plan booklet? Let's go through it so there's no surprises. So if you're too sick or hurt to work for an extended period of time, you know exactly what you're going to get. All right, that's fair. So what we've done here is we've got a group LTD plan for this client here making $150,000, who's 35 years old. It's 60% to $5,000 per month. Remember, their knee-jerk reaction is, oh, no, I've got that through work. They think they're covered. What they don't know is, here's the problem. On gross income, but on a net basis, they're making $150. They're going to try, but nobody lives on 100% of their income. So I just took 24% of effective taxes out. So they're living on about $114. They'd be trying to live, because taxable group LTD, it's employer paid. They'd be trying to live on that. Here's the problem. That's a $68,000 net income problem on an annual or a monthly basis. In other words, Billy, you'd be hemorrhaging money at $5,700 per month that has to come from somewhere. And by the way, that's your best case scenario. When my wife is battling cancer, our expenses didn't magically go down. They went up a lot. So this is like the best case scenario. This should be very troubling to people. They have no idea what they have through work or at all. And our job is to help educate them, to help them understand what they actually have. And that $5,700, short-term, their savings account, their checking account, and pretty soon they're getting into all their other medium-term investments and liquidating stocks, and pretty soon there goes the boat, and pretty soon goes the cabin. They're liquidating everything. It's just a matter of time. It destroys everything. So now what we want to do is to say, let's put this in. Do you think a 35-year-old, one of the other objections, that's not going to happen to me. I'm 35. I've got a great wife and a couple of kids, job's going well. He's not thinking for a second something bad could happen to him. But if you ask Billy, make the unknown known by using the familiar, who do you know, Billy, in your life that's battled cancer, or has had a heart attack, or has had a stroke? Well, my dad had back problems. How old was your dad? I think he was about 52 when he was out. How long was he out? About 4 years. So what we did is we built in this slider here to look at any number of out of work windows to help them understand it's not about statistics. Statistics create an automatic bias, what we call optimism bias. If statistics actually work to sell disability insurance, we'd all be selling disability insurance all day long, because it's so obvious statistically that they should own it. But statistics create optimism bias, which is by definition, the odds, the way our brains are wired, the odds of something bad happening to me are far lower than everyone else around me. Just the way our brains are wired. So we got to get away from statistics, but talk about consequences. Hey, Billy, if this happened to you like it did to your dad and you're out for 4 years at age 52, that's almost a $700,000 loss, income loss, with a group LTD plan. Like your aunt who couldn't recover, what if you at 53 could never work again? It's a $3.6 million loss with the group LTD plan. What if the group LTD plan wasn't there? Your company got bought or sold, or you started your own gig, or you went to work for a company that didn't have a group LTD plan, and then you become disabled at age 52. Look at that financial impact. Nobody survives any of these scenarios. Or, by the way, Billy, tell me more about your life insurance. How much life did you say you had? I got about $500,000 20-year term. Did you know your family's going to blow through that in under 2 years? Are you comfortable with that amount? No. Right away, as Carson mentioned earlier, this helps position and close much larger life insurance, but it doesn't get into UL versus VUL versus whole life versus term. You can get into all those solutions, but what it does do a great job is understanding the human life value of our clients. The human life value is the present value of future earnings. Well, at age 35, it's $8.2 million. But if they passed away at age 52, it's almost $5 million. That 500,000 20-year term is a bad call. That's why we've got to talk about the income asset, protecting it against both their health events that keep, health like disabilities, but also premature deaths. Life insurance and disability insurance are protecting the same asset, just two different risks. That makes sense so far, guys?
Yeah.
Yeah. This is super powerful. Like just the way it lays it out is so easy. If you can't sell this from talking to people, it sells itself.
It kind of does. Simple beats complicated every time. We have people, I get notes all the time saying, hey, Mike, this thing just helped me close a $2.3 million life insurance plan. Hey, Mike, I just had a client thank me for going through this because they bought full disability insurance. One of our biggest users, he has quotes on LinkedIn and stuff like that. He has sold so much disability insurance with this, and everybody thanks him. Hey, Chris, thanks for going through this with me. I now understand what you're talking about. That's what we're trying to do, is educate. This is a client education tool. So that's the first half of it. By now, if they don't think they have a problem, or they actually don't have a problem, I've had scenarios where, based on being part of an ESOP, and they got a 66 2/3 tax-free group LTD plan, and there's not much there left. Sometimes you come across a situation where they're fully insured, or there's just not enough of a gap, or they have other issues that need to be tended to first. Great. 99% of the time we go through this, by now they're going, I guess I'm not as comfortable with my situation as I thought I was.
Now, total side note, but in insurance, our job is to cover and transfer risk, and a lot of times we got a CYA cover our own ass. So E&O insurance is for. What a phenomenal way to prove that, yeah, I did offer that coverage, and maybe they only opted for that $500,000 20-year term or whatever, and it's entirely underwhelming. But they knew the risk because we talked about it, and I'm not on the hook for not offering more, because that is an error and omission, which can put you out of business and put your families at risk because you didn't talk about it, right?
Absolutely. It destroys your career. It destroys everything. And most importantly, you didn't take care of your client. Now, you're right, Carson. If we do our job, not everybody's going to buy from us. This can help our close rates for our advisors go from 10%, 0 to 10%, or 15% to 90+%, because this just helps the client understand. By now, if they don't think that they've got a problem, even they're looking at a 4.9 or $5 million loss here, their heels are dug in. There's nothing we can do about that. You can say, hey, I think you need to be buying disability insurance, but Peter, I'm never going to buy disability insurance. I think it's stupid. Okay, I've done everything I can. I've led that horse to water. It's their job to drink. So by now, if they don't see a problem, move on. 99% of the time we get to here, they're going to say, a lot of times you don't even have to show and even go through the numbers, show the solutions. They're going to say, okay, Peter, I know you, I like you, I trust you. What do we need to do next? And your answer is, we need to underwrite you with a carrier and find out what you can get. So field underwriting is really important. See what they can get. Once you figure out what their health situation is, same thing's true for life insurance and the other things. You got to have an idea of what their health is, because disability insurance is underwritten. The frustration that advisors and insurance agents find is that they don't do any field underwriting. They propose super preferred for everybody, and then they come back at standard or table 1, and everybody's mad. Well, if you'd have asked about things up front, we might not have had that problem. Same thing's true with disability insurance, is that the more you understand about their health up front and do the preliminary discussion about, hey, do you see a chiropractor? Mike, sir, I've got a neck rider on my policy because I'll see a chiropractor. I still see one. I have a degenerative disc in my neck. So what? I got an exclusion from my neck. I'm not worried about that. I'm worried about cancer and strokes and everything else. That's what we all need to worry about. So the pre-underwriting, the field underwriting should make sure that we're talking about things, and you may already have done that through the life insurance discussion. Now we're getting into the rest of it. Go ahead, Peter.
I was going to say that reminds me a lot of Tom Hegna talks a lot when he talks about long-term care needs. And his thing is and you kind of hit on it already, when somebody calls you, it's a problem, right? They call you to ask about something like this, about DI or life insurance or whatever. It's because either something happened to them or something happened to someone they know, right? People don't just wake up in the middle of the night in cold sweats, go, I got to buy disability insurance, right? But to that point, how you start the conversation is going to really drive how it ends, right? So if the person is calling you, and that's where Tom Hegna's thing was, hey, when somebody calls me and says, Tom, I need long-term care, he says, the underwriters go, deny, deny, deny. He says, but when I talk to my clients proactively and I bring it up, it's approved, 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 because you can do that field underwriting and you can have the conversation before it's a problem.
Amen, brother. That's the whole key, is being proactive, talking to them, preempting the conversation and getting after it. Because if we're reacting versus being proactive, it's a problem. It's a deny, deny, deny. I love that from Tom. That's excellent. So by now, guys, just to finish things up, because we can button things up, and we would do a personalized demo for everybody who would like to work on this, is it's time to present some options. So you go find the right carrier through whatever resource you use. And here's how we present. Stay out of the illustrations. Put a little bit of details in behind the scenes. And here's how we present. The third P. The first P was positioning the income asset. The second P was, do we have a problem? The third P is, how do you present in a way the client can easily understand? And here's how we do it. Hey, Billy, here's your income. There's your group LTD. We did that analysis just a moment ago. Here's what a Cadillac plan, a gold plan, a comprehensive plan, you can call it you want, just defaults to comprehensive. Here's what maximum benefit for $220 a month. A moderate plan, a little less benefit, a little shorter benefit period, age 65 versus age 67. Still an okay plan for $175 a month. Here's a basic plan. It's a bad idea. There's a 5-year benefit period, just covering the mortgage, utilities, and groceries, because something's better than nothing. Sometimes we get that going on out there. We don't do that for our homes. We don't do it for our cars and trucks. We don't do it for our bass boat, but we do it for our income, something, just a little bit of coverage. If a tornado wiped out my house and I got a third of it covered, would I be happy? No, it's dumb, but we do that for disability insurance. So don't do this. And I'm doing this for a reason. This is a sales process. We're showing it so the client can make their own buying decision, all compared against their current. Here's where it comes alive. This is how we kind of test the plans on a gross but a net basis. On an annual benefit, here's their annual income, here's their annual group LTD. That comprehensive plan does a pretty good job, keeps them pretty whole. Moderate plan, not bad. Basic plan, problemo, all compared against a really problematic plan, which is their current plan. Then we take it a step further here. We can do that on an annual or monthly basis, and everybody develops their own language and stuff around this. We teach them how to do all this, and they can, they present. By now, most of the time it's in underwriting. But anyway, here's how we take it a step further. Say, hey, Billy, none of this matters unless you have to use it. So let's just see how these plans would perform. Remember our out-of-work window starting at age 52 and not being able to recover like you're on? What if that happened to you? Well, with the group LTD plan, you got a $3.6 million problem here. On a gross basis, on a net basis, is about $2.9 million. You've lost everything. That's with the group LTD plan. How can we solve it? Well, here's that comprehensive plan. It reduces that down. See the yellow? There's still some caution because the group LTD plan doesn't have a cost of living adjustment. It doesn't grow. It's stuck. But the individual DI, doing a wonderful job. Here's the point. We saved them almost $2.1 million of net income. This is how they stay in their home. All their kids still go to school. Oh, but Mike, I love that cheapo plan. Can you show me the basic plan? Sure. It's a bad idea. When clients look at this, they go, that's it? Yep, 5-year benefit period covering your mortgage, utilities, groceries, no COLA, no nothing. Stripped down model because we want to show you something inexpensive. They look and say, well, that's dumb. I don't want anything to do with that. So they get back to comprehensive or a moderate plan. This is how they're in on it. We're not, remember I said don't vote for people? Let them vote for themselves. Let them make their own buying decision. Show them the risk analysis, the shifting of risk, what the options are there, and let them decide. 90% of the time, it's either a comprehensive plan or some blend between comprehensive and moderate. Because by the end of this, if they're going to buy at all, they want to buy something valuable. And that's what this helps them make a good buying decision. It's so easy for the advisor to explain. Last but not least, then we're done, guys, is the fourth P is premium. People think that disability insurance is so expensive. Well, it is when it's out of context. Remember what I said about the illustrations? The illustrations from any carrier makes it look complicated and expensive. Why is that? Because it's out of context. So let's put it in context. Hey, we've got this client here, makes a good buying decision, buys a comprehensive plan, start at age 35, and guess what? We take the health event out. They never become disabled. That's good news, by the way. You don't buy homeowners insurance hoping your house burns down, right? So we don't do that for disability insurance either. Their original income asset was $8.2 million. If they buy disability insurance starting at age 35 all the way to age 67 and never go on claim, never become disabled, all it did is drop their income asset from $8.2 million down to $8.1 million. It's just a sliver or a dusting off the top.
And with a decent DI policy, they're going to get a return of premium as well.
Some carriers have return of premium. A lot don't. Some do, like Illinois Mutual does. They've got a good return of premium. Then this number right here, whatever that difference between the original asset and then after premium, they'd get all of it back. It's a no-brainer. So that's how we do it. So it's the art of insurance is taking a little to cover a lot, leveraging of premium dollars for much larger benefits. Last but not least, then we're done. If they haven't already bought by now, which normally they will have, remember those other assets that they're insuring every day without thinking twice, a home, cabin, and so on. That totals a little over $1 million of other assets. If a tornado came through, it's the wrong time of the year maybe, but a tornado came through and wiped it all out today, they're good to go. The question is, how much does it cost to protect those assets, to properly protect those assets? About a little over $10,000. So what if that same tornado tomorrow, say they bought a comprehensive plan, starting tomorrow, highly unlikely for any of these scenarios, of course, but this brings the point home. They became disabled tomorrow by buying a comprehensive plan, their net group LTD after taxes, plus their individual DI, the comprehensive plan. The benefit paid out between now and age 67 is $5.1 million. A lot. The question is, how much does it cost to have that peace of mind? About $2,640 per year. So here's the point. Hey, Billy, for $7,800 less per year, you've got a protection value of your most valuable asset, your income, of over $4 million more. Disability insurance is not the most expensive insurance. It's the least expensive insurance. Look, I wrote an article that was in a lot of NAFAs and different Aspire magazine and stuff like that I called it the essentiality of income protection. It's not optional. It's essential. If you want to have a successful financial strategy, a successful financial plan, a successful risk management strategy, you have to have your income properly protected, because if it's not, you lose everything else. So the point of this whole exercise, you guys, is to have a really easy to use presentation. We teach you how to do it. It's not just how to push buttons, it's how to talk about disability. Got to have a good carrier outlet. That's your broker general agent, your IMO. And the three-legged stool of the advisor, taking care of their clients, working with a broker general agent or an IMO, making sure they got access to good products and process. They're going to take care of their applications, as well as this income protection presentation. That's the successful three-legged stool. And how anybody on this call or watching this thing on replay or whatever, that's the formula. And it works. Works like a magic trick. Questions?
Peter, what do you got? I've done this, so I want to make sure I give you the floor, because I'm sure you've got some things I haven't asked before.
Yeah. So you're going through and explaining this as we're going. What do you think normally, if we get to the point, we've done the fact finding, it's time to show somebody this and walk them through, how much time on average do you think you're going to take presenting this with the software to show them, hey, these are your options?
They tend to be in 2 meetings, because you can have the basics. If you've got it all, like you said, Peter, if you've got a good fact finder asking about health problems and stuff like that up front, so you can present all at one time and you already have the illustrations from said carrier, that's great. If that's the case, it's probably 20 minutes or so. Usually it's 10 minutes for the front part, then getting back together next week to talk about solutions, because they got to understand their problem and get buy-in for that. So it depends. It could be, if you only have 5 minutes, I'd just show this. Only have 5 minutes with somebody. Hey, I want to talk to you about something. I plugged in, you said you're making about $150,000. Did you know what your most valuable asset? Did you ever think it was going to be your income? And you told me you have group LTD at work. Did you know you have this kind of problem? You'd be hemorrhaging about $5,700 per month, Bill. You think we should talk further about this?
Where's that coming from?
45 seconds. You can have a powerful presentation in 45 seconds. But if you want to do the A to Z, it might take 15 minutes to 20 minutes. And it depends. Most of the time, people don't do the A to Z because they don't have to. You just do what you need to do here to get them into underwriting and get them under it and come back and place it.
So another question is, looking at, I'm sure you talk to agencies all over the country. How do most agencies go about implementing something like this? Because I could see it one of a couple ways. Like, I could see, okay, we're going to add this as an additional tool to your utility belt. And when this conversation comes up, as you're going through and having those conversations about asset protection, hey, this is trying to pull out this tool and have a conversation. So the agents that are already having those conversations, just implementing this as an additional tool, versus, do you see many other agents? Because I'm thinking through, so I've got my personal agency, but I also am a part owner in a much larger agency that we've got offices in 10 different states, and we're in almost all of the Western United States. So I'm thinking on a bigger scale like that, where it's not just me talking to my handful of clients that I grew. Do you ever see agencies that will go through and they'll implement like, hey, this person in our agency is just going to cross-sell our book for DI. This person's going to go through and we're going to have a DI specialist, a lot like a lot of agencies will have a life specialist. Do you see many agencies implementing that where they have a designated team member that this is their thing that they do?
Sure. Yeah, it's all across the board. The independent advisor, the one who's kind of by themselves or just one or two people in their office and a small producer group or whatever, they tend to want to do it on their own. But in agencies where they've got, hey, you're going to be our life person, you're going to be our DI person, you're going to be our long-term care person, they have these specialists. Do we see that? Absolutely. Because they got everybody that you might have a group of 50 agents, but they're focused on employee benefits, on property and casualty, whatever. You're going to have a specialist there who does the DI for them. Then they would be the user of the software. There's a blend in there too, where you've got some fee-only advisors and you've got some ones who don't really. I call this the three. I live on a small lake in Minnesota. It's frozen right now. You could literally go ice skating across it. But for you Phoenix folks, imagine that. But
It's 78 degrees today. Sorry for your loss.
it's not. I haven't seen the sun in a week. But anyway, advisors, insurance agents, and financial advisors tend to fall in one of three buckets. And it's all solvable. So hang with me. The first bucket is they want to sell this stuff, life and disability and stuff like that on their own. They want to sell it. They just need a good wholesaling team to support them. So they want to, what I call fish on their own. They just need to go to get the tackle and the bait and stuff at the bait shop and things like that. So our job is to make sure they're trained properly. They know where to go and where to fish, but let them fish on their own. That group would use OneProtection on both the front end to uncover the needs as well as the close, the full enchilada. The second group is they like to fish, but they want to fish with a guide. So they want to position the case. They want to have the conversation. They want to uncover the needs, but they want somebody to come in and work on the solutions part, the second half. I call that fishing with a guide. Now, OneProtection does a great job on the front end, but they're not comfortable with policy language and stuff like that. Then they use a specialist, whether it be at the BGA or inside their agency or whatever. They use a specialist to help close the deal. So they bring them in and they present the life or the disability and so on. The third group is they like fish, but they don't want anything to do with the fish. They think they don't want to fish. They want to eat it. So they would rather have somebody do it for them. That's different. That's what you're talking about, Peter, where they say, hey, I've got some clients. I think this guy might need some disability insurance. I'm going to introduce you and just get out of the way. So different stats for different, depending on how much work they're going to be doing. But what I say to every advisor is, where do you see yourself? Sitting on the sideline makes no sense. If you truly care about your client, don't sit on the sideline. Weigh in. What bucket do you fit in? What category do you fit in?
Do it yourself, done with you or done for you.
That's right. And we can solve it no matter what. In our network, your network of people that you've got at Revin and inside of the whole thing, we can solve all of these. So the advisor has no excuse to not pursue income protection. If you're not comfortable with it, outsource it. There's a lot of experts out there who'd be more than happy to take care of your clients. They're not going to steal your other book of business. You're working with credible people, and we can set all this stuff up. So as you work with the thousands of people that you guys connect up with who might be listening today, is where do you see yourself? If you want to sell it on your own, there's resources. We'll train you to do this and keep the entire commission. If you want somebody to parachute in and take care of it from presentation of the solutions on, you'll split it. If you want somebody just to handle it, it'll be a bigger split. So no matter where you see yourself, we can help you because we got to remember why we're here. We're here to take care of our clients. So let's take care of our clients and we'll help you do that.
I love that. I love that. I know we've gone a little bit over here before we wrap up or in wrapping up in closing. Is there anything else, Michael? We kind of hit on this earlier, but if this was your last opportunity to share any kind of message with the insurance advisor and financial advisor world about whether it's who you are, what you do, what OneProtection does about disability income or any other piece, what message would you want to share?
Try it for free. What if they could let you drive the new car around for 3 months with no cost? Would you do it? I'd do it every day. Of course I would. So my message today, and to kind of button this all up, is unless you just don't care, except for that, there's nothing we can do about that. But think about what bucket you fit in. But for those who would like to get involved in this and take care of their clients, you can try this for 3 months free. The relationship we have with Carson and with you guys, it's 3 months free trial with using OneProtection. Just go to what's that?
That's insane, by the way. Nobody does a 90-day free trial. That's incredible.
And let me tell you the rationale behind that. Disability insurance is kind of a unique bird. it's different than a lot of things. It can take some time. I just had a guy in South Dakota, young guy, just a couple years in the business. He used OneProtection, presented, got trained, got on the free trial, got trained. My business partner, Jim, did a training session with him, went through a dry run on a case, went out, presented, closed it. A few weeks later, he had another one, went out, closed that. A few weeks later, he had another one. He closed that. 3 for 3 during the free trial. Now, it's paid for it's $79 a month. It's paid for years. So what I say is, my message to everybody is, take this subject seriously. This is a front burner issue. When somebody loses their income, and your client loses their income, their lives are destroyed. Everything we've done for them collapses. It's a house of cards. And so take this seriously. Take income protection planning seriously. We can help you with all of it, but the resources are there. Just a little behavior change and just try it. And on the website, and Carson, maybe you want to talk about that and how they access it. You just access to it. Click on that. We'll connect up, get on a free trial, we'll get you some training, work on some cases. There's 3 characteristics of people that we work with that ultimately become customers of ours. Number 1, first and foremost, this is in addition to their belief structure. I mean, if somebody doesn't believe in this area of planning, we're kind of wasting time, if you will. But there's really 3 characteristics. The first one is, are they committed to their clients' education? Making sure their clients are financially educated. They have to proactively talk about this thing and educate their clients in this area of planning. That's number 1. Because if it's just reacting, don't buy this, because you're never going to be successful selling disability insurance. Proactively talk to your clients. Number 2, which is really important, is access to clients. If you don't have people to talk to, you can have the best tools, but if you have nothing, if you don't have any nails to pound, you have the best hammer in the world, it doesn't really matter. So do they currently have clients or prospects that need and deserve to have this income protection conversation right now? And third, you got to be growth oriented. Your mind has to expand and keep doing what you've always done. You'll keep getting what you've always got. If you don't sell any disability insurance, you don't do anything different, you'll never sell any disability insurance. It's pretty obvious. So are they open to investing their time and their energy and their money into something that can actually improve their bottom line? Not only take care of their clients, but disability insurance pays very well. The renewals on disability insurance are like none other. It's excellent. This is a return on investment conversation. So those are the criteria, Carson, that I would say is that if that fits you at all as an advisor, let's give this a run and see if you can A, do a really good job for your client, and B, make a lot of money doing it.
Yeah. I think and again, it's not to speak ill of anybody, but we wouldn't, if we had to do this job for free, this job is way too damn hard. And we work we put in way too much to do it for free. So yeah, we're going to take incredible care of people and get paid really, really well to do it. That's one of my favorite parts about the business, to be honest. I get paid really, really well to take very incredible care of folks. So everybody go to revagencysyndicate.com//free sources, like resources, but free sources. And you'll find OneProtection on there. You can get a hold of Michael. I know there's some links over to their website, but also Michael's contact info. Michael, other than that, where can folks get a hold of you at?
Well, start there. Michael Sir. I'm the only Michael Sir in LinkedIn. I'm one of the few Sirs in the whole United States. Last name is SIR, literally. And so, if you want to connect on LinkedIn, send an invite to me there. Otherwise, michael.sir at OneProtection. Name of our company, OneProtection.tech, TECH would be a great, just drop me an email. Super easy. And love to connect up with you. But like Carson mentioned, just go to the Rev site and go to the free, what was the free resources, right?
Yeah, resources, revagencysyndicate.com/free sources.
Resources. And then we can connect like that. But hey, Carson and Peter, thank you guys for what you do. You're doing a great job educating and providing resources to insurance agents and financial advisors across the country. So I'm really excited to partner with you, and I just really commend you for the work that you're doing.
I appreciate it, Michael. Thank you for being here.
Thank you very much.
Well, Peter, anything else in closing? We good?
We're good. By the way, I'm gonna build a bridge and get over the fact that you said P for Paul instead of P for Peter. But I mean, this Paul guy, he robs from Peter all the time. It's messed up. Paul gets away with murder.
That's pretty fun.
All right, Michael, again, thank you so much for being here. We'll get this all chopped together and put up, and my team will get you links and everything so you can see your episode. But again, thank you so much for being here. This is
welcome.
Yeah,
it's my pleasure. My pleasure. Thank you guys. Have a good day.
Good seeing you again.
Thanks again. Okay, bye-bye.
Bye-bye.